Hello, 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 everyone. Mike Arnold still here, still limping along in backup mode. Went to the computer store today. So, how's everyone doing? Rally does continue. Good afternoon, Wavy. Yep, Snap did miss. It's down big after hours. Thank you. I did not know that, Sashi. Vanguard is now the largest shareholder of Tesla now. Remember, they have multiple funds. So, not Elon. Elon, yes, Elon. Uh, at S&P at 4,000 bulls. Yeah, it's everybody's back in Super Bowl mode. I know. Like it's going to they're talking new highs. New highs before we know it. Fed's going to pivot. They're going to start cutting this fall and inflation is going to mysteriously go away. Good afternoon, Patrick. Why I love doing this to Snap every earnings report. I thought it was priced in. Priced in is when you want an excuse for what stuff is going to do. All right? It's language. Well, that was already priced in. It didn't react to the downside. It was already priced in. It's just like risk on, risk off days. It's just, I get summaries of stuff in the morning. And sometimes I'm reading it. And they're like, the S&P pulled back 10 points overnight, and then the reasons they give is absolute just a load of crap. Like they had to come up with a bunch of reasons. Or S&P rallied 50 basis points overnight, and I'm looking at the reasons. It's like, this is not, guys, it's just don't pay attention to that crap. Hello, Options 22, Tesla to the moon. Did you see the option stuff? The option juicing, the gamma squeezing was back today in full force. This is why they can't have you on TV. Yeah, I know. This is why I'm relegated to to my little floating head next to a sea of green. They love priced in. They love priced in, risk on, risk off. It's a rotation into this, and then you look at it, it's like that's not you don't even know what they're talking about. As I said the other day, TV now, the financial TV for years has been just a steaming hot pile. Yeah, Tesla weekly calls were insane. So that's where we sit. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please like the videos and leave some comments. Also, if you've been sitting on the fence with wanting to donate, now would be a good time since I have to buy a whole new streaming computer. Hint, hint. So, if you are really, if this does help you and you want to do donate, that's where all the donations for the next while are going to go to the covering the cost of the streaming computer. So, need to buy a whole new one. Diagnosis obviously was not good. Remember, Bob is going to be a little late today. Remind me, Rich, I'll take a look at TBLT. I don't know the open short interest on that one, though, off the top of my head. Yes, Snap was a disaster. Let's cover some other stuff. Only one camera now since I'm in limp along mode. And I am floating away with my green tie-dyes. Remember, jobless claims, as we talked about with Bob, was a miss. Philly Fed was really ugly. Consumer Board leading index also ugly. But this is the whole pivot. Bad news is now good news because the Fed obviously has to stop hiking and start cutting. This market's so addicted to the juice, the cheap money. So we shall see. And for tomorrow, we have the PMI flashes 15 minutes after the open. Keep an eye on these to see how close they if they miss, and how close, really is not if they miss, but how close they get to 50, the level of contraction. Then for the oil traders, you have the rig counts. And that pretty much does it. The heat map we already went through. Mega caps again. Well, yeah, Tesla, just the option juicing was absolutely insane. FOMC, still 75 basis points. Still not dropping back down to possibility of 50. It's pretty much pinned at that 75. By the way, this number's wrong, but just focus on this number. 39.67. Why do I say focus on that number? Because if you look at when we get to the things, we're above that. So we're actually in positive gamma territory. We already talked snap. Snap went to crap. Snap went to crap after hours. We'll take a look at that. That's just sort of fun. You know, again, there's too many people I know still buying Snap. That it's like, oh, it was enough. I did not. I think Seagate was also a miss. I did not have a chance to look. I'm still working on this temporary streaming rig, so I can be here every day with everyone here. I really appreciate everyone sticking with me for the last couple days of technical difficulties. Just trying to do my best to limp along. 3,000 something for a new, pretty decent streaming rig, though. That's expensive. Computers are just ridiculous for what I need to do because I stream to 5 sites. Twitter, tomorrow morning. I'll glance at Verizon because of where the comm sector is, which we cover in the sector overview. Going to definitely look at Amex for the charge-offs and see if they're seeing more charge-offs coming. So those are the things we are watching. That's, you know, Twitter just because of the Elon saga and to see how their results come in. But then Verizon, again, from that communication sector, and Amex from the financial sector as related to the consumer. That's going to be interesting. All right. Sorry, I just don't have the multiple screens or multiple cameras to glance around right now. Let's see. But why Google also sympathized with Snap? I don't understand the question. Why Google also sympathized with Snap? I didn't check Google right into the... What, because did it drop? Oh, did I don't know why Google sympathized with Snap. Don't know. But do we have tech? Well, I mean, we don't have a. We have some pullback in tech, you know, after the Snap results. You see here the little pullback right there. But before we get going with that, I have to give a big shout out to Dan. Dan, thank you. $20 towards new streaming computers. Thank you so much, Dan. Really, really appreciate it. And look, the thumbs up from Wizit661. Again, thank you. All that will go straight towards new streaming computer. Because I have to separate my trading and streaming stuff. Otherwise, it gets way too messy. Okay, thanks, Dan. I hope this ride continues. My penny stock portfolio is up 1%. Would not count on it. So I'd definitely be trailing stops. Dark screen sleep. I would be trailing stops and not let stuff that's rallying up turn back down into losing positions. Hey, John. Why does it trade so choppy? Is it to keep retail out while moving up, or is it because so many shorts are mixed in? Well, not every day is a momentum day. Most days are choppier. You know, most days are choppier. You got to realize the market's about 75 to 80% lean on the side I'd categorize in choppy. This is pretty normal trading. You just get the waves. You get the little waves. Didn't pull that off from before. You get the choppy waves back. That's why you just sort of got to learn. Not every day is like you get the momentum days. You get this as a momentum day. But there's more days like today. Just remember that. And it's nothing back. You just have when there's not strong momentum, it benefits the traders to have the back and forth price action. Also, now remember we are entering positive territory, so dips are slightly muted, rallies are slightly muted on hedging stuff. Also, let me point this out. As you get into cycle toppy areas and overbought conditions, look, last time we were at this level, overbought, boom. Overbought, does that mean it has to drop tomorrow? No, but this is where, again, start trailing stops a little more closely, start watching for the cycle rollovers and topping patterns. Can it still go higher? Yes, but this is when we start observing stuff and say, you know what? It's more likely to start putting in some toppy price action than bottoming price action. Let's see. So that's, Pedro, that's where it sits. Not every day you get, roughly 20% of days are strong rally days. I'll put them in. The rest can be choppy to choppy with a directional bias. Wavy with the results. Snap second quarter revenue 11.1 billion, estimated 1.4 billion. I mean 1.11 billion, estimated 1.4. So yeah, if you want to see Snap real quick before we get into some other stuff, here's Snap. Nice move up and then the crap move. By the way, I'm still targeting major area for Snap longer term is $5 for me, 5.35 roughly, and that's not for the next few days. That's longer term. I'm just letting you know. And you see here also missing on revenue, missing on earnings, pretty bad. I think the only thing was their user count was up. Snap will start the market dump till FOMC. I don't know if Snap's big enough to start the dump. We're already at, as I said, we're already at cycle tops. You have the ES. Let's get back to ES. So let me get the levels out. We'll take a look at the NASDAQ. Again, Tesla did wonders for holding up NASDAQ and S&P because of its mega cap nature. You see bouncing off the channel line and closing pretty much at the harmonic level, right at the 62.5 on the S&P. So it's going to keep trading for 15 more minutes, but that's pretty much, I'm going to say at this point, we're not going to err on the side of projecting higher prices based off that just yet. By the way, if we do rally tomorrow, again, my resistance area will be 4,014, and then the next strong area is 4,029. Watching on the pullback area for tonight. Pullback area, these first pullback areas about 39.74, and then more major support is coming in. I'd really be watching about 39.29 with this support base. And let's glance at the 4 hour, and that would be the bottom of the 4 hour. All right, so those are the key levels I am going to be utilizing. Now the NASDAQ, again, spiking through at one point. I was watching to see if we close above the channel line, but we did not. I'll give you a little tip too. For like an upward sloping channel flag pattern, you want to anchor it as a properly drawn path trend line, okay? And I have videos on that. So this would be the defining point. This is the initiating point. When you copy that over, do not generally go unless you have multiple touch points on moves higher. Focus on extending it from a key candle, not from the highs. It will give you a better range to know if it closes above that basis or not. Now, remember, you can always spike above it, but the key support, while you're drawing it properly from the bottom, for the most part, there are times I will use the best fit line, but for the most part, you want this because this is the strong support. This is an area of resistance. So keep that in mind, please. That is what I found works the best. Also, remember your breakdown zone right here. We're closing right at it after spiking through it. So let's get through the support levels on this. I'm bumping this down now. About 12,526. Then my other longer term support level. Hold on one second. I'll bring Bob on in a second. My other longer term support level is 12,349. Remember, NAS also cycles at the top, not rolling over, and the most overbought this has been since back in at the end of March, before we had that topping area in March. Does that mean it has to stop tomorrow? No. But again, start being a little more cautious to the upside. This is not the time to be aggressive to the upside, especially if you have decent profits locked in. I'm just going to use this most recent swing harmonics from the touch point on the channel line. So if we had another strong rally, even through next week, not necessarily tomorrow, but 12,800 is the next major level. Let me bring on the Bob. Let's see if the magic Bob button works.
I'm exhausted.
Bob, look, I have a new magic Bob button. Are you eating?
Mm-hmm.
You waited till you joined the live stream to eat?
No. We just recorded the podcast with Bob Iacchino, Jim Iorio, and Kenny Polcari. So I had to pull out meatballs.
Hold on. Raj with the big super chat.
What is
Again,
that?
I
Super chat.
ask people for super chats and donations because the trading or the streaming rig is officially dead. So
You
now I
want
have to
these
buy
to
a new
continue?
streaming rig,
Mike has to buy a new streaming rig.
so we'll be limping along for a little while longer because streaming to 5 different channels, you just can't use a silly like off the shelf little like thing that's not. I mean, you could get one configured pretty decently, but it's not like $1,000.
Right.
It doesn't quite work that way. So big shout out to Raj.
Yeah, that's
Let's. I'll get back
awesome.
to some other comments in a second. Bob with the meatballs. There you go. You're already getting the the shout out for the meatballs. Afternoon, George. Worried about the inflation is now making stocks go up. Could this be what we were seeing? Well, we're gonna get Bob's take on everything.
Hey, I'll tell you what. Whoever gives Mike the largest super chat toward his computer will get 8 meatballs shipped to him in a frozen container. My wife makes them. It's my mom's recipe.
Oh,
There she goes.
whoa! So far it's Raj.
Raj is getting 8 meatballs so far.
Unless somebody beats Raj again, every donation, whether it be from Buy Me a Coffee, Patreon, or Super Chats, going straight towards the computer, the streaming computer, so we keep this stream going because I can't use trading computers to do streaming.
Yeah. What was your question? Did you have one? I don't
Did
know.
I have a question? Well, let's just we had more misses. We had the leading index miss, but then it was it's now rally because the Fed's gonna again. Everybody who I talked to today was they're gonna start cutting. They're gonna start cutting. I'm
No, they're
like,
not.
no, they're not gonna start cutting.
No, they're not.
And I'm like, inflation's getting in trend. We're starting to possibly get into a wage spiral. And you know what? They can't just if they ease off too soon, inflation pulls back a little and then pops back up. They will then have lost any shred of credibility they have in my book.
Yeah. Um, I think when you're talking about the Fed, and obviously they're in their quiet period now going into next week. When you're talking about the Fed, you want to look at two things and two things only: the trajectory of inflation and the trajectory of the unemployment rate. And that's it. Because the only way that they can even justify pausing is if the unemployment numbers start to rise, or if they can justify the idea that they're going to rise very soon. Because right now they're relying on their mandates. Their mandates are full employment and stable prices. We are way closer to full employment than we are to stable prices. So they have already expressed multiple times. One thing I'll say for the Jerome Powell Fed, when he said inflation was transitory, he did not act. Okay. When he said he wanted to normalize rates in 2018 for the next crisis, he normalized rates, even though the equity markets went down. When they called it a taper tantrum, he said it's a taper tantrum, so we got to stop normalizing rates, and they stopped. Then the next crisis came, which was the pandemic, and then they went to negative rates briefly. So the Jerome Powell Fed tells you what they're going to do before they do it. And I keep telling people over and over again, you need to believe them. You need to believe that that's what they're going to do. They may pivot, they may pause, and they may pivot, but they're going to say it first. And a lot of them will say it. I would ignore Bullard. Bullard's been right, but Bullard will say it before he's told to say it. Okay, so he may be prescient. He may have been prescient the last time, but he could be dead wrong the next time. But I would listen to guys like Bostic and Barkin and Lael Brainerd and Waller. Who the last two are not, or the last one, second last one's not a guy. Michelle Williams. They'll be the ones who will kind of put the heads up and say, inflation is starting to get under control. The supply chain is loosening up. Housing prices have fallen. Oil prices are down 30% from the high. We may be able to pause soon. And they'll likely say that prior to their last rate hike. And then they'll do their last rate hike, and then they'll pause in the next meeting. So they're going to start warning us prior to the last meeting that they're going to hike rates in. And this coming meeting is going to be 75. So they're not, oh my God, whoever told you they're cutting rates is a moron.
Oh, I deal with a lot of morons, Bob.
I'm sure. Nobody in here.
No, nobody in here. I have not to see it in here. Although we don't have Mr. Stocks always go up in here.
You want a meatball?
Yes, I would. I'm hungry. I was at the Apple store for lunch, and you know they don't serve lunch. They were diagnosing the problems with not good answers. So, well, that's what else? What else? All right, well, you were texting me this morning because we had the ECB 50 basis point hike,
Yeah.
and then you were texting me about the next thing they rolled out,
Okay. So they rolled out the transmission protection instrument,
the TPI.
the TPI. They love their acronyms over at the ECB. The
Wait,
PEP
what was
program
the
is ending.
what? Before you get into that, what was? Does anybody remember what the reports were from Office Space? The TP,
Oh, the TPP reports.
the T. All right, once they start rolling out those reports or those plans, then we really have to worry. But we have the TPIs.
Yeah, so the TPI, the transmission protection instrument, I've been struggling to say that all day, is really bad for the euro currency if it goes into effect. So the way that the trade went today in the euro currency is it rallied off the 50 basis points news. It fell off the TPI news, and then it rallied back in toward the rest of the day as people realize TPI has not been put in effect by anybody yet. Okay. The TPI is basically open to all countries in the EU. They have to be abiding by the EU doctrines, so they have to have a certain debt to GDP ratio, and they have to have certain austerity programs going on. And then basically the ECB gives that local country's government the money to buy securities. And it is not limited to just bonds. They can buy private securities. So they can buy stocks in their own bourses or stock exchanges. So that means that the European Union is raising short-term rates, but they're giving each country the ability to help push long-term rates down if they go too high. That's yield curve control. Is that the yen, Michael?
Is that
What
the
is that? The
end?
euro or the yen? That's the euro.
That's the euro.
Okay, so see that you can see the price action right there. We rallied, we fell, we rallied back.
Well, that's on the daily. Here's the intraday. I
Yeah,
mean, there's
yeah. I mean, I can see what happened in that. I guess the intraday is better, but I was watching it the whole day. But if you put up the yen, in May, the Japanese announced yield curve control. Okay. Now they actually the daily, please, if that is.
yeah
Oh, that's
here.
the euro. That's the dollar led.
Yeah.
So in May, they announced yield curve control, and they've actively been participating in yield curve control. And look at what happened to the yen. It
Yep.
collapsed, absolutely collapsed against the dollar. The euro will do the same if countries start taking advantage of the TPI. All right. So that's what I was texting you.
Yes. So we would see then the euro as a yen because it's the US dollar JPY up here. So the yen
Right.
weakening is rally mode, but the euro, you got to think because it's euro US dollar, the euro weakening would be a decline.
Right.
Now, so that means again more dollar strength because they're trading against the dollar, right?
Right.
So and then we keep getting a stronger dollar, which gets
Yeah.
interesting then.
And the interesting part about that is like we talk about the stronger dollar, but the dollar is strong relative to the other currencies. So, for example, Mike is tall relative to me because he's an inch taller than me, but I'm not tall. So, is
How
Mike actually tall?
how tall are you?
5'9". You're like 5'10", aren't you?
No, I'm 6 feet.
Wow. Okay,
I
you
just
are
slouch
well.
a lot. I just
But
slouch.
no, I'm 5'9". Well, let's do it this way then. I'm like Mr. Olympia of muscles next to Mike,
Yes.
but I'm not next to the actual Mr. Olympia. So what I'm trying to say is with inflation at 9.1%, the dollar's not really strong. It's actually much, much weaker in terms of what it can buy. But it's strong relative to the other currencies. So when we talk about dollar strength, that's what we're talking about. So I had this argument with somebody. They're like, the dollar's not strong. I can't even buy milk. I'm like, okay, I get what you're saying, but it's strong relative to other currencies. Hey, Lauren.
Hello, Lauren. Let's see. Let's see where we. Oh, Raj with the. See, Raj wins it again. The TPS report. Now I remember. The
TPS
the
reports.
TPS report. Well, Bob, next live stream, you're gonna have to wear some flair. You don't have enough pieces of flair on.
I need flair.
Lauren, hey, Lauren, thanks, thank you again, Lauren, who just joined. All this money goes towards a new streaming rig. So thank you, Lauren. Let's see what else we have. Inflation is 9.1, so they need a thousand basis points to stop it for good. I doubt we'll get to 1,000 basis points, but
Yeah.
let's work on 100 more first.
That'll stop inflation for good, though. He's not wrong.
No, it'll stop the economy too for good.
A lot of things.
Well, then we're really talking Volcker days. What are you drinking?
Right?
What are those? Better be liquid vitamins.
No. It's,
What are you sick?
yeah, I'm sick. So, and I got to go see Thor tonight. So, don't worry, everybody. I took a COVID test. It was negative.
All right, we're just making sure.
So that's,
Dels. Oh boy, you're really loading up there.
I'm loading up. Little
All right,
syrup.
ask Bob questions quickly.
What's that?
Ask questions to Bob quickly. He's loading up on the cough syrup.
I'm about to go to sleep.
John, wheat collapsed all the way back down to before Russian invasion. Do you see it going up again? We have that.
Say that again. I'm sorry.
Wheat's collapsed all the way down before the Russian invasion. Do we see it going up again? What's so interesting? This is why you sort of have to follow the patterns, because the patterns are way smarter than me. I mean, we had the double trigger. First, I still see it going little lower. I'm really focused on the 738 before we get a potentially bottoming move. Are there still risks the upside with wheat? Yes. We've had the nice pullback, at least at our first target, still watching this second major target, which is also the bottoms in February before the Russian breakout invasion. So I really think that, anything can happen though, unless they start with the blockade again. They've been doing the wheat talks with, we're going to let a lot of the grains out. But if that suddenly goes off the table, there's risks to the upside. Otherwise, I'd be really keyed off the lows from the beginning of February, end of January, or mid-January, end of February, and this target on the double right around 740. So that's how you use the sort of the fundamental combined with the intelligence of the technicals, because again, I'm not that smart a person, not like Bob. Bob, what's top or bottom for what? Now? We're closer to a top than a bottom. It's in my book. You can ask Bob that.
So, hey, we just did the podcast with Kenny Polcari, and he said he thought the low was in for the S&P. And I said, I don't think it's in it at all. I think the top is closer to 3,000. I'm sorry, the bottom is closer to 3,000. But I'm not willing to tell you what the bottom is. You know what the top is? Infinity.
Well, we'll start seeing next week gets interesting, especially with the tech earnings coming, which strong dollar and a continued strong dollar. No, we're not going there, William. Don't even read William's comment. William's mind is in the gutter. I'm not putting it up there.
Oh, Jesus Christ.
William, you need to have some of Coco's tequila here. All right. What do you need a better ROI on, Lauren? What do you need a better ROI? I hope that's not in terms of your super chats. I hope you're getting a good ROI in terms of your super chats. Let's see, what else do we have? What are your other thoughts? What numbers do we have again tomorrow? Hold on. We have
We got the S&P PMI
yeah.
figures.
Any thoughts on
Um,
that?
yeah, so those are flash July, so it's the first sort of indication of what July is going to look like. Um, the S&P PMI figures, they survey smaller companies. So it's interesting to look at that because there's no like large caps, no real large caps in there. So it's going to be sort of an interesting view of what's going on in sort of that mid cap area of companies, mid to small, large. And it's the first July numbers we're getting on that stuff. So really, really critical to watch those, I think.
Oh, great. We got more. We got Patrick with the super chat or super stickers. Sorry, I call them all super chat. I want them to fix this so we can see the stickers.
I was going to say, when you get the new computer, will you get one that makes the stickers show up, please?
That's not my. If I could, I would. That's Ecamm stuff.
I don't know
I'm
what
going to
that is.
go ping Ecamm again and say, can you make the super sticker show up? They're probably going to say it's a YouTube interface thing. Now I'm going to have to go look at the live stream. But this computer's not powerful enough to run Ecamm and the live stream at the same, or the YouTube thing at the same time. Oh, you're referring to your options ROI? Well, if you were in Tesla today, your options ROI should have been pretty good. What are my thoughts on Twitter earnings tomorrow? I always think Twitter earnings are crap. Uh, but that has
Yeah,
nothing to
it's
do with.
terribly run company.
I mean, it's not going to really matter because everything's based off of the merger or the pending merger. So it's not really going to matter that much. I mean, it's going to trade a little bit unless they have some astronomical miss that then like really throws something into the fire with the pending trial. Uh, your thoughts are an implied volatility crush? Hmm, interesting. Let me think about that. AB says Amazon will report another negative earnings. I'm not going to disagree with you there, AB. Bob, energy markets don't react as expected to Russian sanctions.
Energy markets don't react to Russian
Or
sanctions. Is that
didn't react as expected to Russian sanctions. I don't know.
no? And they honestly they shouldn't, and I'll tell you why. Um, because India and China by themselves um, buy enough crude oil, and Russia discounted crude oil to them. Now, if you look at what happened in the markets initially, we shot up to 130.40 in WTI crude. Brent was even higher than that. All Russia had to do was go to India and China and go, look, the Brent market is around 131, 132. I'll sell it to you for 90. And it was still 15% higher than it was prior to the invasion, depending on what place you market at. So Russia never stopped pumping and never really got hurt. They got hurt much more by the financial side of the sanctions because they had to demand payment in rubles. And I'm not quite sure how they worked that out because they were locked out of basically the dollar-based banking system. But no, they weren't affected at all. And it's part of the reason crude oil is down over 30% right now.
I just what I just love is even when a double could be wrong, move the stop back down to 62 and a half right here on a closing basis, and look where it tripled down to. I mean, here was the 62 and a half, and you won on a daily closing basis. Look at the key support bounce off of there. That doesn't mean it can't still get stopped out for reduced loss, but you gotta love the levels. You gotta love the levels, Bob.
Yep.
At
Love them.
least you have a good roadmap with levels instead of just guessing.
I try to explain to people all the time is that it doesn't matter what again what I say to you guys on the fundamental things. That's a hobby for me. I don't trade it. If I'm ever going to trade it, I usually every once in a while Michael vouch for this. Every once in a while Michael will get a text from me. What do you think of this? And he'll go, "Well, I hate it." And I'm like, "Fuck, Mike." And I know he's looked at a chart and seen something that I've either ignored or haven't seen. So
I'm not that outspoken, Bob. Yeah, if I hate it, I hate it.
Yeah.
I don't
Yeah.
hold back. All right. Any other thoughts on anything else in the markets? I mean, you've had a long afternoon with the recording of the podcast. Is that coming out before Monday or still on the Monday drop?
I mean, I'll actually find out today. I don't think it'll come out before Sunday, but I'll find out today. I don't think it's going to come out tomorrow, if that's what you're asking.
Well, I
I
wouldn't know,
actually did
but
hate doing it on Thursday. I got to be honest, because now I have time over tomorrow to do the parts of the editing that I need to do. I don't have to work on it on the weekend.
well, as soon as you get it to me, it will be posted, and I will let people know on Discord. Dennis wants Bitcoin. Interesting enough, with Bitcoin today, there's still
Double
that
bottom, right?
what
Didn't we have a double bottom on Bit? Well, I guess it's a triple
on the daily.
on the daily.
The daily was initially a double, yeah, and turned into this triple messy. This was actually too big a rally up, and then it didn't. It confirmed, and then it dropped back down. What's interesting is even with your huge Nasdaq rally, Bitcoin's still trying to trading unchanged after a little drop. Bitcoin's really struggling. I'm really focused if it does rally up to this 25K level, not just because it's 25. It's actually 24,975 is the 50% retracement from this down move. But you have cycles at the top. So if we start breaking, remember I said watch this key close, which we dipped there and found support there. But if you start breaking down about this 22,400 and
Mm-hmm.
then you break 21,650, watch out below. So the first warning sign is 22,400, the major with cycles at the top on the daily and cycles getting to the top on the weekly and against the weekly rotation zone. If we start getting that confirmed rollover moves, it's over, especially if we get even with the Nasdaq rolling over next week. So I'd be cautious to the upside, but trailing. Okay, because yes, you could still get a bounce up to this 50 area. Let's see. Real quick, can you play earnings just by following the chart, or it really depends on the guidance? You can play earnings following the chart, but remember, there's a lot of times there's no chart pattern going into earnings. So if
I
there's
yeah,
no chart pattern, then you're relying on other stuff
I
for
would
your
throw out. Go ahead, Mike. I'm sorry.
play. I mean, again, if you look at the chart and go, "There's no pattern here," because a lot of times you've heard me say that. I look at the chart and goes, "There's nothing here," so I'm going to wait post earnings, and then because a lot of times based off the gaps, if there's a gap in the earnings, that leads to a play. So generally, a lot of times, if there's nothing pre earnings, yeah, you can follow guidance, you can follow other stuff, but still, I've seen companies announce great earnings get hammered. I've seen companies announce totally crap earnings and rally to the go up. But you know what? Let's say they announce crap earnings and it's the buy everything mode. I start watching then for the rollover gap fill play. They announce good earnings and they get oversold and we're in decent market conditions, you can go for the gap fill. So not everything you have to play before earnings unless you have a specific thing. And there are option strategies dependent on implied volatility and the chart pattern that can be played too. But that's generally beyond the scope of this live stream because I'd be here for so long answering questions that we wouldn't get to anything else. Now, you had a thought, Bob?
I would just throw in, be really careful where that question comes from, John. Like, kind of look inside and see why you want to play earnings. Um, a lot of people are like, oh, I want to play earnings because the moves are big. But if there's no pattern, like Mike said, I mean, you're just asking for trouble because you're guessing. So just be super careful about why you ask that question. I mean this sincerely. Um, Mike and I want to play patterns, and if the patterns emerge, earnings is a consideration, but never a reason for doing something.
Exactly. There are certain plays, but not everything This is where I even talk with stocks, separate from earnings or separate from anything, futures, anything you want to trade, FX. There might be times I look at a chart and goes, there's nothing here. There's no probabilities in
Right.
my favor. All right. So it's don't where people get stuck that I have to trade this stock like every day or every week. I always have to be in this stock with a play. There isn't always a play. Sometimes no play is the play.
Right.
So what regardless of earnings or anything else, if you learn to look at a chart and if there's no probabilities in your favor based off whatever signals you trade, then it's just a pass for the time being. You're not going to capture every move. You shouldn't try to capture every move. You try to capture the some of the highest probability moves. Not all, because you're not going to ever buy the bottom, sell the top. You try to take the chunk out of the highest probability moves. You do that repeatedly, you can be very successful in this business. You try to always trade every move, you're going to end up blowing yourself up. I've seen it way too often, especially with people in Tesla. They're like, I missed the rally. Oh, then they start chasing it. Then they end up chasing, and then they end up losing themselves money because they missed the move, and they're trying to call every move in Tesla. And people are notorious for that. Oh, then Dan asked about Tesla. Sorry, I didn't see that. Let me just get the. We had a question from PayPal from. Let's see, Fire Camp. If you're new here, Fire Camp, thank you for being. I've yet to see you before. PayPal. Interesting enough. So here we put on your harmonics. We had the runoff that closed above the 50. Also, the close above today, 62 and a half. We got earnings next week. Cycles are at the top, but probability wise, we just filled the gap left behind. Remember, gaps are magnets. That was the high today. But you break through there, your next two targets, and you have statistically favorable price action with the close above the 62 and a half to target 86.50 area. Then you have to a roughly 88.60. But with cycles at the top, be mindful, of a potential, especially with the 4 hour, be mindful of a little play back. Your major support is coming back with the 4 hour rotation zone and the prior breakout level right here and the 50% harmonic, which comes in at 78.50 area. So do keep that in mind. But statistically, you have still your odds favor a little more continued upside. And you are into the weekly rotation zone, but this is where I don't over push bets because anywhere in here, we can get another rollover play, especially with weekly cycles at the top. There you go.
If I could, Mike, I want to speak to John one more time with his follow up, and then I'm probably going to jump off.
Sure. Here you go. Let me get the follow up.
Yeah.
That's right. I heard a lot of times don't play earnings because it's basically gambling, but if you can do it with patterns, why not? Is that then why not? I guess.
Here's what I want to point to with that. So saying I want to play patterns, I want to play earnings with patterns is backwards. Earnings is a consideration if you have a pattern and earnings are coming up. Okay, it's earnings isn't necessarily gambling, but you said it kind of in your original question where you said, does it depend on the guidance? The earnings can point to a stronger stock. The guidance can then point to a weaker stock. And then all of that depends on what the market's perception of that stock is in the first place. This applies to basically everything, economic data with futures or with commodities or whatever. Market's perception, the market's opinion of where the stock or commodity should be plays a lot into how the market reacts to a particular piece of news. A lot of that stuff is built into patterns, okay? And that's what's so effective about high probability price action patterns and technical analysis, is because what you're seeing behind every candle is what people think, okay? And an up candle, it means people think it should be more valuable. A down candle means people think it should be lower price and they want to get out. And you're seeing all the emotion of all the trading behind each candle. There's a good example of one right there. So when earnings come out, you might get these back and forth moves that whips you through a high probability pattern. Earnings is a consideration, not a target. So still, the way you worded that, if you can play earnings with patterns, why not, means the earnings is the focus. The patterns has to be the focus. I'm doing this is a little bit of trader psychology, and I hope I don't sound like an arrogant prick. I'm not trying to be. The earnings is a consideration when you find a pattern, not the other way around. You shouldn't say, hey, this stock has earnings. Let me see if I have a pattern here. There should be a constant process of looking for patterns, whether you choose a bunch of different stocks or whether you go through, like Mike does, 100 stocks a day sometimes. Earnings are a consideration within the pattern you're looking at. Not this one's got earnings, let me see if there's a pattern. And it's actually really, really important to kind of understand that, because you'll find yourself finding patterns if you do that, even when there's not one. I can give you an example, but I'll let Mike follow up if he wants to.
No, that's why it's also why we analyze both the bullish and bearish case to prevent us from hopefully getting lopsided opinions and seeing stuff that's not there. And that's where, again, earnings can focus you, because there's a lot of randomness still in earnings, which even a good earnings report can be bad, a bad earnings report can be good. You have guidance also as a consideration, and just sometimes there's just not a play. So I would rather, if you're going to focus on earnings, I'd rather, if I was going to give somebody advice, I'd say focus on post earnings. That's where you start. You start the post earnings move, because, all right, earnings are out of the way, and a lot of times there can be overreactions to earnings. So you get post earnings moves. So if you want to start learning patterns, do post earnings starting, because now you have that one aspect out, and you might be able to spot there's lots of patterns that happen post earnings, or especially with gaps, that, hey, that's the higher probability trade. It wasn't the earnings trade, it was the post earnings trade. So, all right, you are welcome, John.
All right, if that's it for me, guys, I'm gonna take off.
All right, thank you, Bob.
All right, guys, talk to you tomorrow.
All right, I'll get to some other questions, then we'll take a look at. One time I played docu earnings, bought calls, and stock dumped 45%. I lost tons of money. Also, if you're playing with options, remember, who pointed out with the IV crush? Remember, if, let's say, not only, I've seen this happen before. Let me see where that comment was. Again, I'm scrolling back through them. Thank you, everyone, for the super chats. That is really, really helpful and beneficial. I was in a really bad mood. It stinks when a computer blows up. But, all right, you have implied volatility. Let's say it's very high. And let's even say you bought calls like Coco. Now, let's say don't even pretend it gapped against you. I've seen plenty of times the market will gap in your direction, but implied volatility gets so crushed, the Vega gets sucked out, okay? So even people are like, well, the market, it gapped up in my direction and I lost money on my calls. And it's like, yeah, because the implied volatility got sucked out so quickly, because an even bigger move was expected that did not materialize. And now the options are rapidly repriced a lot lower, and the amount of implied volatility that was removed more than offset the calls going in your direction. So that's where, again, and then when you play options with earnings, you have a whole different thing. Now, the better way, if you want to explore something, and this would not be the area I'd start, but for more advanced people, start learning how to price in potentially muted moves with earnings in stocks with higher implied volatility, where you sell the options. Again, I can't give you specific trading advice on this channel because I don't know you, your account, or your time frames. But that's a great area to start, because when you get the implied volatility sucked out, if you sell straddles or strangles and you learn to spot patterns around that, you don't have to be right on a direction. You just have to be right on the implied volatility being removed from the market, the options market. So then you're not playing a direction, you're playing implied volatility and the implied volatility crush. And if you get good at that, you can get good at consistently playing earnings. Again, that's not where I'd focus if you're new. Hey, you're welcome, Fire Camp. Let's see, and then we'll get to hey, Dimitri. Hi, Americans. That's right, Dimitri. Well, actually, I'm also Canadian, Dimitri. I'm dual citizen. I was born in Canada, so I'm dual. Where do we sit? Where do we sit? You know, all right. I think that was in reference to the Bitcoin. Tesla, again, Tesla with the I did not think the earnings was that strong, you know, but people will disagree with me. I think there's like a lot of, again, we'll call it the fudge factors in there. It's going to be very interesting to see that 10Q when that comes out. But again, you had massive, this was one of the highest options days we've had in Tesla in a while on the weeklies. Can it continue? Yes, be very careful with cycles at the top on the daily and the weekly, but I will give the next levels higher. Again, this was a break above support. So now, if you're playing this to the long side, your prior resistance right here, that was this little mini two-top pattern, which is actually a significant minor level, is 795. You start getting below 795, it's the gap fill back down for the target, and that gap fill would be to 742. To the upside, you see we bounced off the 37.5% harmonic, pretty much there, 820. Now to the upside, my next levels higher, and I've refined these, are 836.50, which is this gap down open, which on a continued up move, we still, now remember, NASDAQ cycles and S&P cycles are at the top. So if they start rolling over, it's going to weigh down on Tesla too, but that's your next thing on the upside. And then you have a gap fill left from the beginning of May, the 6th of May. And that key gap fill would be to 865.65. And that doesn't even take you to the 50% from this most recent sell-off. So that doesn't even take you to the major topping zone yet. Snap and let's just peek in on those, and then I'm calling it a day if you don't mind. Again, I spent a lot of hours trying to get this thing set back up. Ooh, snap. Is that now below? Yeah, not quite. It's trading right. 1204 is trading right at key support. Going to be interesting to see if it gets a little bounce back before tomorrow. This could easily be a slight little snapback before the next major rollover play, though. You know, Meta. Oh, wow. Yep. Interesting. I just want to check something out. This is why it's handy to have a systematic approach. Oh, boy, look at this. Let me pull off these other harmonics just so you can see this. Again, this is why you got to learn a systematic approach. And if you've been watching me for a while, you pretty much know some of my systematic approaches. What's the first thing I did? I put on the most recent swing down, the most major recent swing down with the harmonics. Look at that 62.5. And then we got the rollover. So then this is the rollover zone, remember? So, and all the way back to pretty much the daily rotation zone. Now, what's interesting is I would watch, if we do bounce tomorrow, I'd watch for this little, people will target this key gap open. Because this technically filled the gap. Remember, a gap fills a gap. All right, but then you'll still see the void on the chart, so people will still target the void on the charts. Be worried about Meta if it starts breaking below 170.50. That would be the bottom of the rotation zone in this area. Then I would be targeting the full gap filled out back down to 167. And this is also where you use your other harmonics on this run-up pattern. Because right below that, and you have another gap down here, but you get the daily close below 165.35, it then favors the statistical approach to retest the lows. cycles at the top on the daily and getting into the top on the weekly. And remember, within the weekly rotation zone, anywhere in here, we watch for potential rollover play. So that's how you deconstruct a market from the simple thing, and then you can start constructing your trades. That's the handy thing about having an approach. All right? I don't just wing it. It's, but everybody can learn this. Mike, do you use technicals besides harmonics? I see a number of stocks starting to move above the 50-day EMA. Yes, I do. Yep, I use the rotation zone. I use a number of things. I use my cycles. I use uh, Bollinger Band stuff. I use RSI. My major stuff though is pure price action. But you don't. You just need a handful of things. Now, if you made me strip away a lot of stuff, could I just trade with price action and harmonics? Yes. Pure price action and harmonics, you can actually make a good trading career with just those two things. No, double bottoms off. That's why you're targeting to the upside that 50% harmonic. And the more things back above the 50-day EMA takes us more out of oversold condition. But again, if we were coming off a long-term bottom, that would be much more bullish. Then we don't have a long-term bottom in place. I have no long-term bottoming signal yet. So it's just getting us out of the oversold condition where people start getting way too comfortable with the rallies, and it actually is a counter signal to me. Okay, well, you're wearing me out even with that statement. You trade futures on a 1 minute chart. I like to trade them on a little longer because then I don't have to worry about the patterns on the longer are slightly better, but you can definitely trade them on a 1 minute chart. Roku, again, still in consolidation, still against the weekly rotation zone. Your major breakdown zone, which was tested back in June, and we're still in a double bottom pattern. We got close to the full pattern. But if you want your next upside targets, you got pretty major resistance about 103. 103 earnings on the 28th, so that's next week. So the only thing going into earnings, if you're playing to the upside, the target would be about this 103.50 area. And then above there, let's get the harmonics on there. 103.50, then you're targeting 106.11, so roughly 106, which is this spike high. And then if you did run up a little more, your major area is 114, but I'd be watching if you did pop up into here, going into earnings for a rollover play, because that would also take it into with cycles at the top. Let's look at this. Look, between the 50 and 62 and the prior double target, you have the weekly rotation zone. And this was coming off of pretty severely oversold conditions and worked that off, and weekly cycles are at the top. So that's your upside. Now, to counteract that, because you always need to analyze things both ways, because you have to know, especially if you're playing for the bullish case, what your levels are. That's not going to give us anything else in the short term, although these key lows are roughly where the 62.5 is. What I would be watching is if you get back below about 90 bucks. If you're going to give it a little more room, about 89.50. Below 89.50 before earnings would not be good for a continued bull case. And then shops finding a bottom is so funny. Yes, I agree. But a lot of stuff is, again, where do we sit here? I got to see this. Shop will be fantastic. Shops Hey, the PE ratio's down a bit at least. Uh, Breaking out Shopify, you still have a gap here left behind before earnings. I would not, if we can get a continued crap rally, it's a little risky with cycles being at the top. But if we do get the crap rally, I would not target the full gap right now. I'd target the open from the gap. That's going to be the next magnet higher. But yeah, I think you'll get a lot of people sucked into a number of these stocks and then they'll miss on earnings and you'll get snapped. So that's why I would be really cautious with these. But it is breaking out above. It's sitting right here, but it looks like it closed right at this key prior resistance, which has some minor significance there. If it starts breaking below about 38, I'd be careful on that one. A TBLT, and that's the last thing. This is the next what, Rich? This is the next. Well, it finished statistically with that close above the 62.5. It finished its full statistical move with the 50 right overhead. Once the market rolls over again, this thing will be done for. But until then, this is why I don't like these plays, because they're just emotional juice. I'd say if you start breaking down, first of all, the open of $5 roughly. What is the open exactly? 498. Start breaking down there, 467. You break down 467. You got the gap fill, but I'd see this thing easily retracing. This thing will retrace easily. If it does push higher, your target's 618. And then above there, ooh, I doubt it'll get to there. I'm looking for even a pausing bar. I'm looking for a pausing bar because in order to do harmonics, you're best to use a pausing bar. Let's just see where the short-term harmonics give us from that bigger pausing bar. So we already have 612, 618, so now I got to come up to this one. 6.9, yep. So 618, 619 right in there, and then 672. Those are your targets, the upside. Yeah, it's again, we're into the mega crap rally. But this will keep getting juiced until it's not, and then people will be shocked when it's back below $2 again. You watch. All right. With that, oh, not GME. Please, no. Oh, boy. Is that a little... Ooh, little mini double. I don't have anything to say about GME right now, though. Besides, a pullback level would be about 146. If we break below that, it's back to the 51.3807. That's where we sit with that. I'm wrapping it up. I am very tired today. Again, thank you everyone for tuning in. And if you are new here, please do consider subscribing if you've not already. Thank you again to everybody who did the donations, the super stickers and chats to go towards the new streaming setup. Thank you so much. And I will chat with everybody. I will be on tomorrow morning at the regular time. Hopefully this current streaming setup holds up just fine. Until then, I'll talk to you later. Bye for now.